Good morning everybody and welcome to this European session on Wednesday the 3rd of September. Hope you are all well. Let's dive in and see some of the big themes affecting the flows of the markets and highlight some potential trading opportunities for the London and Sydney trading floors to keep an eye on for the course of today. Alright, so first of all, we've had multiple countries starting to cut GDP forecasts, and GDP stands for Gross Domestic Product, and it measures the annualized change in the value of all the goods and services produced by an economy. We've had the Federal Reserve of Atlanta cut forecasts from 2.5% to 2.2% after economic data showed a drop in consumer growth. We've also had the Bank of America cut China's GDP forecast from 5% to 4.8%, with lower forecasts for next year as well. So this is why we've started to see a big sell-off in global stock markets, okay? Because stock markets are heavily affected by economic growth and the health of the consumer. And most stock markets have been reaching record highs. The Dow, the Germany 40 reached record highs the last week. The S&P, Nasdaq not quite there just yet, but we've had some significant declines this week so far to start off the month. Now, long-term trends are still up on stock markets, okay, so these are just pullbacks that we're dealing with, but it is going to be a trend to keep an eye on because we know we are in this environment of peak interest rates where now most central banks are cutting interest rates, okay, and they're doing that because they increase interest rates first of all to bring prices down, to get people to stop spending in the economy and get prices down before things overheat. But because people have not been spending in the economy and now economic data is falling, this is now what is giving the leverage for central banks to cut interest rates to get people spending in the economy a little bit more. But it is a balancing act, because that lower growth could easily lead to a potential recession, okay? So it's something to keep an eye on. No one's really talking about, there were some talks about a potential US recession, but those have been negated now. Right now, we're just dealing with lower growth forecasts and stock markets are adjusting accordingly, but we still will be looking to buy any dips once price starts to move a little bit higher. But right now we've got a bit of a shakeout here, so just something to be mindful of. There hasn't been too much of an effect in the currency market because right now, if you've been tuning into these webinars, you would know the biggest themes affecting the currency market right now is interest rate policy, okay, with the US dollar weakening on the interest rate cut that is coming up later on in this month. So that's where the currency market is, focused on interest rates, but if you're trading other asset classes, then keep an eye on the economic data, GDP forecasts, it's going to actually make a very big difference. It's also why we've seen oil prices crash lower as well on lower growth forecasts around the world. So less need for oil, so we've had significant declines in oil prices. So just some big things to keep an eye on as well, and again, different sort of news announcements, economic data affects different markets in different ways. All right. Now today, big day for the Canadian dollar because we do have the Bank of Canada interest rate statements, and a Reuters poll has revealed that the Bank of Canada is expected to cut interest rates from 4.5% to 4.25%. It's the third consecutive interest rate cut from the bank. The poll found analysts expect interest rates to end 2024 at 3.75%, highlighting more interest rate cuts along the way. And recent data show that slowing growth in a cooling labour market will keep inflation from rebounding, which will support the case of the central bank to cut interest rates further. Now, when it comes to interest rate statements, okay, well, pretty much with any type of forecasted economic news announcements, we don't trade what we think the news announcement is going to be. We don't expect the central bank to do this, that and the other and start trading that, and we certainly don't try to react if there is a surprise in the market and the algos are just dumping their positions, readjusting their portfolios, and you're trying to compete against robots who are taking trades within nanoseconds. All right, what we look for are surprises, because remember from your day one learn Forex work, everything's already priced in. Institutional speculators build positions in anticipation of future events. That's why they hire thousands of analysts all across the globe. So their trading desks have time to build positions in market because their capital size is so large, they can't start transacting in £10 billion of currency in just one trade. They need time to build their positions over many trades. So we know everything is already priced in, just like, for example, the US dollar, okay? And the central bank haven't even cut interest rates yet, the US Federal Reserve, but they're expected to later on in the month, which is why we've had the US dollar declining, where that has been a really big trend, all right? Now, the key is when the market gets surprised. And this is where the economic data is really different, or maybe the central bank does something that catches the market off guard. Maybe the Bank of Canada don't actually increase interest rates today, or maybe they actually cut interest rates a lot bigger than everyone's expecting, and they cut it to 4% instead of 4.25%. It's those surprises that we're most interested in. Just like last week when we had that surprise business outlook report in New Zealand, which went to a 10-year high. No one's expecting it, and it caused a massive rally in the New Zealand dollar and a nice sustained trend after that. You know, something we've been participating with those short trades that we had on pound New Zealand, euro New Zealand, all right? So the key is identifying the surprises, but then the follow through. That's the key, because then if everyone's readjusting their portfolios, then we can get some really good high probability trends that develop after that to participate in. So that's really what we're most interested in when we get a surprise news announcement. If the news announcement is already expected, we don't tend to see, you know, a lot of movement in the market, maybe a little bit on a really low time frame, but you know, really to get the high probability trends and movements, we want to look for those surprises if there is one, and then look for any follow through that does develop. Of course, if there are any surprises on any economic data, then I'll let you know with potential trading opportunities to try and participate in them, but also make sure you're tuning into those live trading webinars every single day so you can stay up to date with everything that is happening in the world's financial markets. Now, the Canadian dollar itself has been a bit mixed. We haven't had, you know, a clear-cut trend in the Canadian dollar. We've had dollar CAD going down, we've had pound CAD going up, euro CAD is a bit sideways. All right, New Zealand CAD's been going up. That's because of New Zealand strength. Aussie CAD's been a bit sideways. So it's been a bit of a mixed picture with the Canadian dollar because everything has already been priced in so far already, right? We've already had, well, this will be the third consecutive interest rate cut. So, you know, a lot of it is already priced in. But let's see if we get any surprises that could start to change the picture and, you know, cause some, you know, good opportunity for us to focus on. Alright, so let's dive into smart charts and highlight some potential trading opportunities from the London and Sydney trading floors to keep an eye out on. Okay, so let's start off here with the phase changer and Euro US dollar, something that we have been trading, and there's a couple of things that are interesting here on top of what smart charts has found. We can see that actually once buyers got above the moving average zone, it pulled back and buyers turn up in the moving average zone again, drove it to a new high, pulled back, they turn up in the moving average zone here again and drove it to a new high, and now we're sort of back into this moving average zone. Okay, now you can see the momentum hasn't been as strong as it has been, but that's obviously because we're at the beginning of a new month. Lots of high impact news announcements. You know, the volatility can sometimes die down a bit as people are a bit more cautious in piling lots of money into the market until things sort of start to pick up and we get more clarity around economic data and so on. But we are in this zone here where buyers have turned up before. We do have this angle of price where buyers have been turning up here before. So we do have multiple pieces of evidence on why there is a high probability chance that buyers might decide to turn up here again. All right. Now, what we also like is if we zoom out the chart, now you can see here historically, even all the way here from last year, look at the cycles, the staircase trend that we get off the moving averages. So on the way up, you know, we do tend to get these bounces developing off these moving averages on the chart, which is interesting. And also, even in a downtrend, you can see price tends to cycle against these moving averages when the market is actually in a trend. Now, of course, at some point, trends do come to an end, all right? They don't bounce off the moving averages forever, okay? But we can only trade what we have in front of us today, and that's how trend-based trading works, being consistent. Because if you've been trading, if you're a master trader, you might be trading the first high or low here. If you're just a trader from Learn Forex, then you would have been trading this second phase one cycle here, and then looking to keep on trading it here. And then of course, in the daily phase one moves, you've probably been trading on the lower time frames, hammering out your 4 hour, 30 minute, 1 hour, 30, 15 minute chart cycles as you're positioning yourself in that daily phase one move. So there's been multiple opportunities to participate in those dollar pairs. For the daily chart traders though, we'll be looking for price to continue here, and some traders might even see if we can get to this high point here. It's a bit far away, but there is space for this trend to continue. Now, not only does Smart Charts helps us to highlight those potential opportunities, but also makes the risk management part, which is the most important part of trading the financial markets, very simple. Because if we click this buy icon here, Smart Charts will populate an entry price here at the blue dot, stop loss on the red dot, target the green dots. These can all be adjusted according to your own user preferences. We'll also do the risk management calculations, and it's important to keep your risk low to make sure you're able to deal with the random distributions of wins and losses that develop throughout the season, throughout the month, throughout the week, throughout the day as well. And then we like to set expiries here as well, so that way if buyers don't actually turn up to continue an uptrend, then that's fine, your pending trade will expire, you didn't win, you didn't lose, it didn't actually cost you anything. Right? Because of course we don't know if buyers are going to turn up. No one can predict the future. All we know is that, look, there's a lot of evidence here suggesting that buyers might decide to turn up because they have been turning up here before. So if they do, we want to be ready and waiting to be prepared for that opportunity. But if they don't, then that's fine, right? The trend will change, market conditions change. Sometimes no one turns up, okay? In fact, this week, because we're dealing with more lower volatilities, the beginning of the month, people coming back from summer holidays, people are waiting for economic data. I've had a lot more orders that I've placed this week that have expired because no one's just really turned up and got the market moving. So sometimes that's going to happen, okay? The week before that, every single order, none of them expired. We had high momentum and everything went to the entry and went up to the target of the stop loss. All right. So again, understanding how the market works becomes very important. Our job is to be prepared to capitalize on opportunities coming our way. All right. Also, pound New Zealand. So something that we have been trading quite a lot actually on the lower time frame. So if you recall, we have been trading pound New Zealand on the market breakout strategy from last week when price actually broke outside of this wedge formation. So we had this really big cycle formation developing, and then it started to get compressed into this wedge formation, and because of the surprise news announcement that we had on the New Zealand dollar, New Zealand's business outlook surge into a 10-year high, that helped New Zealand dollar to rally higher, and then we were looking for price trade this breakout of this wedge formation. So that trade there was actually quite nice on the market breakout strategy, and we did say, look, we'll look for some continuation here as well to see if a trend does unfold. Now there are opportunities here actually on the 4-hour chart of the market breakout strategy, because we are still in this zone, aren't we? So we are still in this zone, still on this angular price here. We are still have broken through the bottom of this wedge formation and retesting it. So we've got a confluence of resistance areas here, and we're also still in this moving average zone where sellers have actually turned up here before. Okay. So we still will be looking for sellers to turn up and maybe continue and move lower here. So there's a few different ways to participate. So if you're a 4-hour chart trader, you can also see that, look, you could participate in this on the market breakout strategy, but also on the daily charts, you can see that we do also have something developing here with the daily chart creating this lower low, lower high cycle on the daily chart moving averages, and also on this angular price. So in this instance, well, you wouldn't take the daily chart trade and also the 4-hour chart trade, because now you're just doubling up and risking 4% on just one currency pair. But of course, this comes down to the time frames that you're trading on. Some people just only trade the daily chart, some people only trade the 4-hour chart, some of you will only trade the faster time frames. Okay, of course, the more time frames you're able to participate in, then the more trading opportunities that you can actually participate in as well. But of course, you don't want to double up on positions. Okay, so of course this is down to your preference and choice. Some people will trade the daily phase changes, some people might trade the 4-hour chart market breakout strategy. So in this instance, so here the entry to stop loss on the market breakout strategy is a bit smaller because we're on a 4-hour chart, which means that if the market does go lower, then we might be able to get a bit more of a higher reward to risk if we use a trading stop loss, or if you're doing things like that. So this obviously comes down to the way you're trading as well, and the way you're going to be managing different trades. But smart charts will make the risk management work really simple for us by clicking the sell icon here. It will populate an entry price at the blue dot, stop loss at the red dot, target the green dot. Again, these can all be adjusted according to your own user preferences. Do the risk management calculations here as well. So remember to keep the risk low. Make sure you're able to deal with the random distributions of wins and losses that develop throughout the season. If you struggle to deal with the random distributions of wins and losses, then you shouldn't be once you start running your whole high performance trading business. You're doing your back testing every single week, forward testing every single week. That is part of the trading conditioning, to deal with wins and losses, to help build the belief and confidence in what the market is telling you to do. So make sure you're sort of doing that work as well. And Smart Charts makes all that back testing and forward testing work so easy for you guys. So really something to incorporate into your trading business plan if you haven't been already. Something we go through on day 3 Learn Forex anyway. So make sure you're doing that. And on the daily chart, we'd like to set a current bar close expiry, and basically what that means is that, look, if sellers don't actually turn up here, okay, and continue this move lower, then that's fine. Your pending trade will expire. Didn't win, didn't lose, it didn't cost you anything. If they do turn up, trigger into a live open trade, either it goes to your target level, either it goes to your stop loss level. All right, because again, we don't know what's going to happen in the future. You've got to sort of start thinking, well, look, if sellers did turn up, if you were trading down here, would you look back at that trade and say, yes, that met the conditions I was looking for? I had a lot of evidence of sellers turning up there. That forecasting mindset becomes very important, all right? So a couple of trading opportunities highlighted there. I mean, there's loads of different trading opportunities, so be careful of risk management and make sure you're not overexposing yourself. But that's it from me. So I'm going to wish you all the best with your trading day ahead, and I'll see you next time.